Hey everyone, welcome back to NIM's Adventures to Financial Freedom. Today I want to highlight a YieldMax fund that deserves more attention. It pays steady yield, avoids NAV erosion, and has actually grown since launch. Most people don't even know it exists. So let's dig in, and I'll reveal which ETF it is. Some of YieldMax funds get all the attention, but the one I'm looking at today has been quietly delivering results. Now, let's start with the basics. This fund launched on November 21st, 2024, so it's still relatively new. Right now it has about $7.7 million in assets under management. That's very small compared to other YieldMax funds. And it shows this one isn't very popular yet. It charges a 0.99% expense ratio. Since launch, it's climbed about 2%. Over the same period, the S&P 500 gained just above 8%. But here's where things get exciting. Once you include dividends, this fund's total return jumps to almost 11%. That actually puts it ahead of the S&P, which is sitting just above 9%. So what is this hidden gem? It's called BIGY, or Biggie. Now, let's talk about how Biggie works. This fund is built differently from the single-stock YieldMax products. It actually owns the underlying stocks directly, no synthetic positions. On top of that, it writes covered calls, collecting option premiums every month. That's where the income comes from. Biggie aims for around a 12% annual yield through its options strategy. And since launch, it has already shown it can deliver consistent monthly distributions. Now, let's take a look at what Biggie actually holds. It owns 50 of the largest U.S. companies. And here are the top positions right now. Apple is the biggest at about 12.5%. Next is Nvidia at 11%. Microsoft follows with 10%, then Alphabet with 7%, and Amazon with 6.5%. Meta makes up about 5%. Broadcom is around 3%. Tesla is 2.5%. Eli Lilly is also 2.5%. And rounding out the top 10, you have Walmart at 2%. So while it's heavy on the Magnificent Seven, you also get exposure to healthcare, consumer staples, financials, and energy. That balance makes Biggie very different from the single-stock YieldMax funds. Of course, every investment has risks. With Biggie, the biggest trade-off is capped upside during strong bull runs. And if mega-cap tech struggles, this fund will take a hit. But compared to the single-stock YieldMax lineup, Biggie's holdings are blue-chip leaders. These companies are less volatile, and that stability has helped Biggie avoid the NAV erosion we've seen in other funds. To me, Biggie is one of the most underrated funds in the YieldMax family. It avoids heavy NAV decay. It delivers a consistent yield. And it's backed by some of the strongest companies in the world. I don't own Biggie yet, but I do plan to add it in the future as part of my core portfolio. As always, remember to do your own research and consult a financial advisor before making any investment decisions. So, do you think Biggie is a hidden gem that deserves a spot in your portfolio? Let me know in the comments below. If you found this video helpful, don't forget to give it a thumbs up, subscribe, and ring the bell to stay updated. Also, feel free to share this video with others who might benefit from these insights. It helps us grow and continue this journey to financial freedom together. Thanks for watching, and I'll see you in the next episode of NIM's Adventures to Financial Freedom.